We will not be wasting any time. We're just going to get right to the video, straight to the point. This is going to be short and painless. So who and what is Sofi? Sofi basically markets themselves as a fintech company. Fintech stands for financial technology company. So basically, they're supposed to be this company that's revolutionizing the way that we do finance using technology. So as you can see from the financial services productivity loop, they offer all these products and services from student loans, home loans. They have credit cards as well. They have a trading platform where you can trade stocks and other financial assets. That is basically what they do. And a lot about this company is, I can't say groundbreaking, but they're doing a lot of things that a lot of other companies are basically seeing as risky or outside of their circle of competence. So SoFi is going out there and they're basically they're cutting a path for the future of finance. And that's a very good thing in my opinion. I love it when companies step up their game and they improve upon what we already have. SoFi is one of the leading companies in this space, obviously. You hear about them all the time. They're on TV, advertising. They have built sports stadiums and stuff like that so people can watch basketball, baseball, football. People do concerts in the stadium as well. So that in a nutshell is who and what SoFi is. I personally think that you cannot mention financial technology companies without mentioning the legacy financial banks, like the Wells Fargo's, the Chase Manhattan Banks, the Bank of America's. All the popular financial technology companies are going to be competing against these old companies that have been around for dozens and dozens and perhaps 100 years. And these companies as well, they're not just standing still and watching companies like SoFi and Robinhood and all the rest of them. They're not just sitting by and watching these companies just eat up market share. They're also offering their versions of financial technology. So it's important for you as an investor in SoFi or somebody that's looking into investing into SoFi to pay attention to what these companies are doing and have been doing as well. Me personally, this is part of the reason why I will not invest in SoFi as of yet, because I'm not confident that SoFi is better than these companies. I don't think that they're better set up than these companies. They do business better than these companies. And I think they're less favorable to the market than these companies in many ways. I'm not saying that SoFi is a bad company and the stock is not going to do well now and in the future, but I'm saying that as of right now, I think it's too soon for me as an investor, because owning banks like Bank of America and all these other banks, these old banks, Chase and stuff like that, JP Morgan and Wells Fargo, I think owning these banks, you're paid a dividend. So being that they're paying you a dividend, they're basically paying you for owning their stock. And these companies are known for raising their dividend year after year after year after year. I'm not going to sit here and argue about the negative things that these banks have been involved in now and in the past. I'm not denying any of it, but I'm saying that these companies obviously are favored by the government, because whenever they do shit and they fuck up your money, they fuck up the country's money, the US government has a tendency to bail these companies out. And I don't see that happening for a company like SoFi if they happen to be in a financial struggle. I think the government is going to let a company like SoFi shit the bed, and then they're going to let that company be bought by one of these old legacy companies. That's how I think it would end for a company like SoFi. I don't think that would happen to a company like these companies that you see on the screen right now, and then some more it's too many to mention. But basically, I don't think that SoFi is as safe a company to invest in as these companies, even though these companies have a long history of being irresponsible with our money. So when evaluating a company, right, I look at all the financial data as I possibly can look at, going back at least 10 years. So I'll look at the finances for at least 10 years, and then I might go back even further depending on what I'm seeing presently to see if the company has a history of doing certain things, what have they changed. Now, evaluating financial companies is very, very difficult, and I can't pretend that I'm some type of expert in doing this because the best investors in the world know that investing and evaluating and finding intrinsic value of a financial company is very difficult, but I did my best. And what stood out to me the most that you need to know about Sofi compared to other banks is here. So I did a revenue to operational expense ratio, which is basically how much of your revenue are you going to retain after you've paid all your operational expenses, which includes like salaries and all that other stuff, buildings that you may own and stuff like that. And this one stood out glaringly to me because SoFi, they tout themselves as some financial technology company, right? Where they basically don't need a lot of physical locations. However, after they've paid all their operational expenses after their revenue, they're only left with 8% of their revenue. Whereas Bank of America, a legacy bank that is known to have a lot of physical locations, and people see that as brick and mortar, they don't like that. A lot of people don't like brick and mortar locations in the companies that they own because they tend to be less profitable. However, Bank of America is managing to smoke by literally 30% to smoke SoFi when it comes to operational expense ratio to revenue. And I don't like that. If you're a financial technology company, at least be more profitable. And of right now, they're just not. You can say that they're spending a lot of money on CapEx so they can grow the company to get to scale and all these other things. Well, okay, come and see me when you're finished growing to scale because I cannot deal with 8% profit margin at all. I can't deal with it. Like, that's not good for me for a financial technology company. You have to have a higher profit margin than this for me to basically put my money at risk. So I don't own Bank of America. I'm not saying I'll never own it, but as of right now, I don't think that it's right for me at the time. But if I won't own Bank of America, is what I'm saying. If I won't own Bank of America, I definitely won't own SoFi. It's a very popular stock and everybody loves it, but it's just not for me. If you've made it so far to the video, I'd like for you to like, comment, subscribe, follow, share. I really appreciate that. This will help me with the channel, to grow the channel and gather more people so that I can improve the quality of my videos. Because right now, I know the quality of my videos aren't very good. I'm doing the best that I can with what I have, and I appreciate it if you appreciate it, but I'm going to get better over time. So this slide is basically growth versus stability. SoFi versus Bank of America. SoFi being a growth company and a stability company being Bank of America. I like a balance. I like a balance between growth and stability. And SoFi or Bank of America don't offer that to me right now. You can own SoFi and say, yeah, they're doing this and they're doing that and they're growing really fast and X, Y, and Z. And that's just not enough for me because the way that they're growing is not in the type of way where I can see the stock price moving in a direction that I want it to be moving, which is up and to the right. So SoFi, Bank of America, absolutely not for me. It's not a buy. It's not a sell. It's basically, I would just hold off on it and see what happens in the future. In conclusion, I would like to say you don't have to take my word for it. You can go and look at the numbers yourself, and you should go to look at the numbers for yourself and do your own evaluation of these companies. Whatever you buy, sell, hold, that's up to you. If you want to find out about a stock and make decisions about a stock, go see a financial advisor. But as for me personally, I am not going to invest my money into SoFi. I don't care how much people say, oh, this is going to happen and this catalyst is going to happen, like when they had the student loans coming back right now and people say that's going to increase their revenue and da-da-da-da-da. Like, I don't believe in any of that. You have to show me. You have to convince me because things like risk is important in my investment thesis. And I think it's extremely risky to buy a company that's so entangled in consumer debt. And they're increasing their consumer debt by issuing things other than personal loans like credit cards. Like, the company is just a ball of financial risk, and I don't appreciate that at all for my portfolio. So thank you for watching the video. If you like it, like, subscribe, comment, share, and I'll see you in the next video. Peace.